Imagine a world where a single announcement at CES 2025 by Nvidia's CEO Jensen Huang doesn't just move markets. It sets the stage for a $24 trillion robotics revolution. Huang's keynote wasn't about humanoid robots or factory automation. Instead, he revealed a vision for the world's first trillion-dollar robot, a breakthrough in autonomous driving, powered by Nvidia, and one unlikely $7 stock that could impact 65 million American lives this year. So what's this mysterious $7 stock? After parsing the clues from Mark Robinson's hyped-up sales pitch, all signs point to Aurora Innovation, ticker symbol AUR, a self-driving technology company founded by veterans from Google, Tesla, and Uber. Aurora's flagship product, the Aurora Driver, is a Level 4 autonomous driving system designed for both freight trucks and passenger vehicles. In January 2025, Aurora made headlines by announcing a major partnership with Nvidia and Continental, using Nvidia's Drive Thor chip as the compute engine behind their driverless system. Aurora's first-mover advantage was cemented in May 2025 when it became the first company to operate commercial driverless heavy-duty trucks on public roads in Texas. This leap put Aurora ahead of competitors like Waymo, which suspended its trucking division, and gave it invaluable real-world data. But the celebration was short-lived. Just 3 weeks after launching, Aurora had to put human safety drivers back in the trucks at the request of its manufacturing partner PACCAR, due to issues with prototype parts. This sudden reversal raised serious questions about the readiness of Aurora's technology and the confidence of its key partners. Nvidia's partnership with Aurora has undeniably boosted sentiment around the stock, with Aurora's share price surging more than 50% after the announcement. The deal is part of Nvidia's broader push into autonomous vehicles, providing both hardware and software to power Aurora's driver platform, with mass production slated for 2027. Analysts see this as a validation of Aurora's business, forecasting quadruple-digit growth in 2025 and high double-digit growth for years to come. However, some experts caution that the partnership may not fundamentally alter Aurora's trajectory unless the company can prove its technology works reliably in the real world. Aurora's technology may be cutting edge, but its financials are less inspiring. In the first quarter of 2025, Aurora reported just $250,000 in revenue against a $28 million net loss, burning through cash at a rate of $637 million per year. With $1.2 billion in the bank, Aurora has less than 2 years of runway at current spending levels and expects to need another $650 to $850 million before reaching positive free cash flow, something it doesn't expect until 2028. This raises the specter of further shareholder dilution. The autonomous trucking market is enormous, with potential cost savings of over $200 million annually for major customers like FedEx and operational improvements, including 25% faster transit times and 30% cost reductions. Aurora has lined up partnerships with giants like Nvidia, Continental, PACCAR, FedEx, Uber Freight, Volvo, and Toyota. But the competition is fierce and the failure rate is high. Waymo, Embark, and Too Simple have all pulled back or pivoted away from trucking. This is a winner-take-most scenario, and only the strongest will survive. Despite setbacks, institutional investors are piling in. JP Morgan, Franklin Resources, and State Street are among those increasing their stakes, and insiders still own about 15% of the company. Analyst consensus price target is around $10, nearly double the current price, with some predicting a move to the mid to high teens if Aurora can execute. Still, there's a disconnect between analyst optimism and the company's current fundamentals. Aurora's internal struggles are real. The departure of key executives, including a co-founder and senior engineering leaders, signals possible internal challenges or lack of confidence in the company's direction. Meanwhile, a short seller report claimed Aurora lacked proper permissions from PACCAR to commercialize its trucks, and the manufacturer's insistence on reinstating human drivers has added credibility to these concerns. Trucking is, a $1 trillion industry and actually one of the largest employers of people without college degrees in America. The rise of autonomous trucks threatens millions of jobs and, honestly, resistance from workers could be fierce. potentially even leading to sabotage of autonomous vehicles. While big corporations may ultimately prevail, the transition will not be smooth. Nvidia's vision goes far beyond chips. It's really about building the infrastructure for the next industrial revolution. Its partnerships with Aurora, Toyota, and Uber, well, they span the automotive, logistics, and AI sectors, all aiming to create a seamless ecosystem for autonomous vehicles and robotics. While the market reaction to Nvidia's CES announcements was, kind of muted in the short term, the company's long-term growth prospects remain compelling, with AI, autonomous vehicles, and robotics all in play. And Aurora Innovation is, honestly, the epitome of a high-risk, high-reward stock. It has first-mover status, blue-chip partners, and a shot at $1 trillion market. But the road ahead is, well, fraught with technical, financial, and regulatory challenges, not to mention fierce human and corporate resistance. If Aurora can deliver on its promises, the upside is enormous. But as of now, the story is really more about hopes and dreams than hard results. For most investors, caution is definitely warranted until tangible progress is visible. For those willing to bet on the future of AI-powered logistics and stomach the volatility, Aurora and its partnership with Nvidia could be one of the most fascinating stories in tech today. If you found this breakdown eye-opening, don't forget to subscribe for more deep dives into the next wave of technological disruption. The future is being written now, and you're watching it unfold.